Welcome in, everybody, and welcome back. My name is Jeremy Tonks, host of the Big Law Capitalist Podcast. Good to have you. Good to see you. Thank you for stopping by. My guest today is Jonathan Tonks. He's the managing partner of Provision Space, which is an apartment syndication firm based in Holland, Michigan. I've talked about apartment syndications on prior episodes, but I felt like we needed to do a little deeper dive on the idea of an apartment syndication and the upside benefits of doing so. And so that's what this episode touches on for the most part. There's also some mindset stuff built in as well. I like to make sure we're touching on mindset because I think that's critical. In particular, with Jonathan, he has a fantastic mindset. He leveled up from literally a duplex all the way up to he started buying apartment buildings. And so that's where I want to get all of you, because it's all about action. It's all about having the mindset and taking action. And so he's great for that. I think it's great for you guys to hear his thoughts on, why he's doing what he's doing. Right, his why. I think that's critical for anybody who's in this space. So I wanted to bring him on. He's young, he's hungry, he's experienced, and I think you all will really enjoy his perspective. So without further ado, let's bring in Jonathan. Let's go. All right, and we're in there. Jonathan, man, welcome to the show.
Thanks so much, Jeremy. Appreciate being here.
Absolutely, man. We're happy to have you. I think you have an expertise that I think our audience will really learn a lot from and enjoy as well. So, but before we dive into it, I wanted to make sure that I chatted with you about your background, right? Because I think I want our audience to know, who you are, where you're from, and how you sort of got into the investing game. And so, if you can, just let us know, where are you from? What were you doing prior to investing? To kind of give us a little bit of your background.
Absolutely. Happy to. Well, thanks again for having me on, Jeremy. I'm from Metro Detroit area in Michigan. I currently reside in a city called Holland, Michigan, which is on the west side over on Lake Michigan. And I've been out here about 3 years now, but my background really is in engineering. I come from an automotive family. Both my parents are electrical engineers. And my plan for as long as I can remember was just to work up the corporate ladder and grow in that space, kind of follow my parents' footsteps.
Nice.
And it was really just an environment of curiosity and learning and tinkering and building. And I'd say it's quite a fun childhood growing up and excited to be participant in that. And I did follow in those footsteps for the first couple of years. I went to school for mechanical engineering, graduated from a university out in Flint, Michigan, called Kettering University. Quickly after that, though, working with an automotive supplier, graduated, moved out to Holland. And that's when I bought my first duplex. That's when I got introduced into real estate. And it was from that initial purchase that really got me down the road of business in general, but also real estate, and more particularly into commercial real estate and syndications.
So I didn't know a duplex was the first entry into the investing game. Was that a house hack situation?
Yes, it was.
Oh, dude, we got to dive into it. I love a good house hack story.
I should say a disclaimer on it. I started renting actually for the first couple months out of graduating. So I was looking for a duplex. I had read Robert Kiyosaki's Rich Dad Poor Dad. I'd been reading and educating over the last few years up until that point. So I knew I wanted to do something in terms of business. I didn't really know if it was going to be real estate at the beginning. Mm-hmm. I was doing little micro businesses here and there. But when I knew I was going to move, I was looking for a duplex. Just from the standpoint of my rent at the time when I was renting from an apartment complex, it was decent. I was there for about a year, and then they're going to raise my rent almost double overnight. I'm like, I could afford a mortgage payment with this. So that's when it became the search. I hooked up with a couple buddies who got me into duplex in Holland, and I currently am living in one unit, renting out the other, mortgage and gave me a lot of flexibility moving forward.
I'm a big fan of the house hack situation. On an earlier episode, my business partner, he does these essentially for a living. Like he either does a live-in flip or like a house hack. I love the idea of it. If we can, just real quick, because I think it's actually really interesting. What are the numbers on that deal? Like, what'd you buy it for? Did you do any work to it? What are you renting it out for?
Great question. So it didn't pencil at the beginning. So I was a little nervous getting in because everything that I had researched and I knew going in, being an engineer, the numbers had to make sense, right? I was looking for the 1% rule. I was looking for things that cash flowed. But this property, I bought it 2020, end of 2020 for 205,000. It was it was vacant for about 10 years. So I would say that it was vacant. I bought it from a woman who completely renovated it. But the average rents in the area were about 1,200 at the time, 12 to 1,400 a month. So one unit wasn't going to pay the mortgage, especially if I was doing a FHA loan, being I was living in, so 3.5% down.
Right.
The insurance tacked on top of it. So it wasn't penciling at the beginning, but there were some things I was able to do to it. The very solid rental market in this little city of Holland that I'm in, and done some improvements, like I mentioned, and raised it a little bit over the last couple of years. But
fantastic, man. Like I said, I love a good house hack story. I wish looking back, at how I got started. When I graduated law school, me and my wife, we did, the typical thing, right? Like we, young married couple, we went and rented an apartment for 3 years, and so it's kind of blew money on something that wasn't going to give us a return. So I never, at that point, didn't truly understand the power of the house hack, where you're buying a duplex, buying a triplex, fourplex, whatever it is, and then living in one, renting out the others, and you're essentially paying for your entire lifestyle. Man, kudos to you for like jumping on that early, because that's the name of the game. You're building, equity and also, adding income. So that's fantastic, man.
But if I could be an encouragement to any of you guys who are interested, and guys or girls interested, because I was looking at triplexes and quads, and I was trying to get into something bigger that's cash flowing, like I mentioned. But the mentality that got me into the duplex, and even though it wasn't cash flowing day one, it was a net gain from what I was doing before, right? So if I'm paying $1,000 a month in rent, and even if the delta between my rent and my mortgage in my unit is, say, $200 a month, that's a net gain of $800 a month. So even though it wasn't cash flowing right off the bat, it was better than the situation I was in. So it just got the ball rolling, got the juices flowing, and the thought patterns moving. So even if it's a net gain, whatever you can do to get moving, that's the key.
Absolutely. That's a great point, man. Because I always tell people, everybody's looking for the home run. Like they're looking for the perfect bird deal, right? Buy, renovate, rent out, refinance. Like they're looking for the perfect bird deal, or they're looking for the perfect first flip or the perfect first investment. I'm like, there's no such thing, and you don't always have to hit a home run, right? Like, and I use a lot of baseball metaphors. I don't play baseball, never have. Don't understand why I use this, but it just seems to fit the model the best. From a baseball perspective, like base hits and doubles, like that's going to win you the game, like that'll make you an all-star. You don't have to go up and just crush a home run on every deal. And so like when people, look at stuff and they I'll pitch deals to people and they'll say like, oh, well, I wanted to make, this X percentage. And it's like some astronomical number. I'm like, that's cool, man. And I truly do hope you find that someday. But the reality is that's not going to be every deal. Like, and if that's your expectation, you're going to be, incredibly disappointed. But the reality is, get your money working at a good number and continue to do that, because over time that's going to build that wealth. That's how you obtain that substantial number. So I like that point. That's a really good point by you, because people don't think about it that way. They think like, oh, it's not paying for itself, then it's not a good house hack. Not true. If it's getting you in a better position than you otherwise would have been in, that's a good house hack. That's a good investment. Yep. So good point by you, man. So you finished up undergrad, you're working, you're an engineer, you're doing a house hack. When did you, and we can also kind of dive in now too, as far as like what you're doing now, when did you make the pivot to real estate investing?
It was probably right at that time when I bought that house, and I had a tenant move in the day that I closed on it. That was just a God situation of lining those things up. But it was that moment when you take the application and the studies and they mash together. So I've been reading about it, learning about it, knew something in real estate was enticing to me, just the way I thought and the way business worked in my mind. Pairing it up with a tenant and a property, and then realizing, okay, if you just look a few years down the road, how do we grow, and how do we use the word scale all the time, right? How do we scale this into something that's truly passive, or it's replacing income, or whatever the end goal is for you? How do we get to that level?
Right.
And for me, it just became, I was networking with people, going to meetups, going to conferences, just asking this question: what was your strategy? How did you grow? are you flipping 100 units or 100 homes a year? What else are you doing? And the answer that kept popping up to that question was, we're going to buy apartment buildings, and we're going to buy them all over the country and partner with these people who are in those local markets and scale it that way in a vehicle called a syndication. And that's when I dug into it, joined a mastermind group, got some coaching and mentorship, and that's how it started. So it was quickly after I officially created my company, Provision Space, less than a year after I bought that first duplex.
Fantastic, man. Good for you. That is the leap of a century. Just, you're like, no, I'm diving all the way in. Good for you.
You have to, man. You have to, right? You believe in it.
You have to, man. And so when you started up the company, and you kind of alluded to it before, but what was the idea? And we'll loop back to and get a better understanding of like syndication and what goes into that and the kind of the nuance of it. But what was the general idea as far as an investment strategy? Like you were mentioning, like, investing across the country. What sort of apartments were you looking at? And when I say that, I mean, everything Class A, Class B, value add. What was sort of the idea behind it?
Yeah, I read a book by Steve Burgess, and he talks about value add, and it's I think the book is called The Complete Guide to Buying and Selling Apartment Buildings. And it's kind of old school. It's really numbers based and fact based, and he's talking about basically flipping an apartment every year through a value add strategy. So initially, that was my thought. I was looking at Class B, Class C. At the time, this is early mentality, 20 to 50 units. I thought that was what I was capable of doing in my local market, what the type of assets we had around my local market was. That's what I was looking for. But quickly realized that with a few good people in your corner talking in your ear, it's like we could go a little bit bigger, we could go better. And by better, I mean better growth markets, better opportunities. And that's really where it started to go from there. Yeah.
Like higher price points. Yeah.
Higher price points, higher unit count. Yeah.
Fantastic. And so let's kind of circle back, because I want to dive into, what you've done since the inception of the company and like where you're headed, and more on that. But I wanted to also touch on just the idea of syndications, right? So we've talked about syndications on prior episodes. I've yet to do a super deep dive on it. And so I want to take some time to sort of explain it to the viewers, because it's not a term that's regularly tossed around in conversation, right? Like, you're not bringing up syndication at the dinner table if you're not, working in real estate or invested in one. And so people aren't hyper familiar with the idea of a syndication, but it's an incredible way to gain substantial wealth and exposure to real estate, not only just asset class diversification, but also like geographical diversification. And so the idea of syndications, like when you say a syndication at its very basic, at the most basic level, what would you say that definition is? Like, what would you define that as?
Very fundamentally, in as simple terms as I could say it, it's partnering with individuals to purchase and acquire an asset. Doesn't have to be real estate, but to purchase an asset jointly with multiple individuals.
And so if you're looking at like this cycle, like the life cycle of a syndication, the idea, and let's use value add as an example. So the idea there is like, you're buying an asset with a group of people, right? So you're creating what can be, in any number of vehicles, but generally it's like a partnership, creating a partnership, buying an asset, enacting your business plan, and then essentially selling it at a later date, holding it, doing a refinance to pull your cash back out of it. But there's like a business model around it. When you got into it, and you sort of alluded to it, but your idea is essentially, and I love the idea, it's something we actually employ at New Homes Capital Management as well, which is you use capital that you syndicate and then partner with, high level operators in other markets, right? Mm-hmm. So what markets are you targeting?
Really, I target markets where the people I know, like, and trust who are operating the deal are located. What I mean by that is Provision Space, my company is invested in 4 assets right now. 2 of them are in South Carolina, one's in Lincoln, Nebraska, and one's just outside of Pittsburgh, Pennsylvania. And all 4 of those assets were acquired and really found off market from people who live in those locations. So they have intimate knowledge of the market fundamentals. They have established relationships with brokers or banks or whatever partnerships we're going to need to take these assets down. They have those relationships developed and thriving.
let's dive in real quick on that, because that's a crazy good point. And I always tell people, like, when it comes to an operator, you want to have certain facets sort of built into their business model, because like that's how you can trust what they can do. And so an operator that has sort of that line, right? That line of relationships of business where they can create, the property management, they can handle the financing, they can do all that. GCs, they can handle like the business plan part of it. That's super important. But I would ask you, if you were to explain to somebody why that's vital, because a lot of people don't really understand like that relationships can be a game changer, good and bad, in real estate. Why would you consider that to be vital if you're investing with somebody, say in outside of Pittsburgh, Pennsylvania, or down in South Carolina?
There's a lot of reasons that come to mind. The biggest one, I would say, and we've seen this again on all four assets, is you couldn't find them if you didn't have those relationships. They weren't listed on an MLS. They weren't listed on a public platform where you could just say, hey, I'd like to buy this $20 million property in Charleston, South Carolina.
Right.
It was a bank came to our partners and said, hey, we have this asset on our books and we want to sell it to you. So having those types of relationships, and again, there's a lot of large syndication firms who have established themselves in different cities outside of where they're headquartered, and they have relationships that they build. So it's possible to be outside of your state. Like myself, I'm in Michigan, but all four of our assets are outside of Michigan. But it's just critical because from the standpoints of when we're trying to scale, how we talked about a little bit earlier, through the syndication model, when you're trying to scale, your relationships are vital because you're trying to get outside of areas where you may be limited on, let's say, if you have a cap on your rent growth, and the bank, or I'm sorry, the local governments won't let you increase the rents past a certain amount. Just tenant-friendly states versus landlord-friendly. Like, you got to overcome some of those hurdles, and one way to do that is by partnering with people that you trust in those thriving markets.
And that's a great point, because when people ask me, like about the idea of diversification, it's always like, oh, like, do I need to diversify as far as like having a ton of units, right? Like, and I'm like, well, yes, that's important. The more units you have, the less any one unit having a downside risk will impact the overall portfolio. So that's important. But a bigger piece of it is geographical diversification. It's huge, because when you are looking at like a portfolio, say it's all centered in one city, you're sort of capped at the limits of that city, right? Like, not just from a boundary perspective, but also from like the upside of the economics, right? So, but if you're able to geographically diversify where you're in an expensive market, and then you're like more of a class, B market, and then you're over in like a market that's straight cash flow, like you can touch on different markets and get different values. And so you can sort of like aggregate the returns, in the overall portfolio, and create like a really solid, safe portfolio through geographical diversification. And like, I can't figure out a better way to do that than with, your business model, right? Like the syndication model, where you're able to touch on different assets without actually having to be on site and be there in that state and like be hyper familiar with that particular locale.
Absolutely. No, you hit it on the head, man. Exactly.
Yeah, man. And so I wanted to dive a little bit deeper, because I think, although now, we've talked about the idea of a syndication, pulling funds together, like in the aggregate, it creates a fund of money that you're then able to use to purchase assets, right? But who's the investor, right? Like, so the people who make up the investment base, your limited partners in that partnership,
Right.
What's the typical investor you run into? First, I guess, better question, where do you find your investors?
Yeah, good question. And even before I touch on that piece, I want to make sure that the structure is established for the listeners trying to understand the syndication. We've glossed over it kind of quickly, but
yeah,
just so they know, even if they've heard it before, syndication has an active partnership team and a passive partnership team. And we call the active group the general partners, the GPs, and that consists of everyone who's part of the acquisition. So the partners who found the deal, who are doing the underwriting, who are doing the property management, everyone who's active on a day-to-day or week-to-week basis in running the property to be profitable, that's the general partnership team. On the other side, the other portion of a syndication often comes from people who are contributing equity or capital to help us close on the properties. We call these limited partners, or LPs, like you said. And together, that's what forms the syndication. So we have a separate LLC for each property, and the limited partners are investing in that LLC as a passive investor, as we call it. So they're just receiving we do monthly distributions on their money for the contributing the money towards that asset. Now, to go on your question on where do we find them, what type of investors are we looking for? I don't discriminate. If you want to invest with me, I'd be happy to talk to you. There are certain things that we look for and that generally we have more success in if we're trying to raise larger amounts of capital. Anyone who, I like to say, people who are well established in their careers, either you like your job, your W-2, which is great, and I love people who are heavily invested in what they do. Generally, they're producing more, they're doing well, larger incomes, higher net worth. But let's say you're well established or an expert in your field, you just don't have time to go searching for properties at night or on the weekend, or on calls with brokers all the time, or underwriting deals. Then you're a great candidate for being an investor. We'd love to participate with you and partner with you on assets like that. So people who are heavily invested in their careers, people who have high income earning occupations and have extra income that they don't want to put in the market. As we're seeing right now, it's not doing so hot. So just a different way to diversify your income.
Yep.
Those are some keys. But I like to partner with, I generally partner with people who have similar backgrounds or similar experiences. So I get a lot of engineers. I have my pilot's license, so I meet a lot of pilots and different avenues like that. But a lot of attorneys actually I speak with. Great partners to invest with.
Absolutely. Yeah. I totally agree that I was going to say, like, our investor base, a lot of times either physicians or attorneys, people who, high income, high net worth, but not necessarily exposed to real estate, or if they are, they're looking for, additional exposure. And so, yeah, that's a fantastic point. Side note, real quick, I didn't realize you had your pilot's license. Wow.
Yeah.
Okay.
Yeah. I was planning to go into the Air Force right out of high school. Made some decisions last minute not to, but I've always wanted to learn how to fly. And COVID actually provided that opportunity. I was furloughed for about 6 weeks working from home and didn't have anything to do. So I was in the basement just doing all my online courses. I took them all, and then when everything started coming back, I got my pilot's license. That was a couple years ago. Yeah.
That's awesome, man. That's awesome. I had no idea. That's bad research on my part. There it is. No, that's awesome. And so getting back to the idea of syndications, and so let's walk through what it typically looks like when somebody's investing in syndication. And you mentioned the structure of it, right? GP, LP. So from the LP perspective, the limited partner perspective, what can they expect if they hear from you? And this is after you've met them and they've expressed interest. What can they expect when, you have a deal in hand and you're like, we're raising money for this. It's now on your plate. How do you put that in front of them? What can they expect from, that point until funding?
I would say it even goes before we find a deal, right? We're constantly building relationships, wanting to make sure our investors are educated. I've had a lot of investors, or a few investors, invest through their 401k or an IRA. Mm-hmm. So making sure they're understanding we got to set that up before we even find a new deal, just to be prepared. So it's a constant educating, constant building relationship, making sure that they completely understand what they're involved in. Because we say a confused mind is a no. And we don't want you to be confused when we present something. We want you to only be able to pick apart the deal itself and not worry about the fundamentals of how does this work. Right? We want you to understand that. So it's a big relationship building beforehand. I would say right when we're in the early stages of potentially getting awarded a deal, I'll be communicating with people like, hey, we're looking at this market. If anyone knows this market or has some inside knowledge, love to get your feedback. But then, like you're talking about, right when we get to that point of we're awarded the deal, we're starting to move forward. We have, as soon as we get a signed PSA or signed LOI, we've got 60 days to do our inspections. We've got to do all our due diligence in that period. So you'll be receiving updates on us touring the properties, picking apart, like determining what our business plan is going to be. So it's pretty interactive, even though our LPs are passive. Like, they like to see pictures. They like to see, well, what do the renovated units look like? So we're trying to make sure they're heavily involved throughout that entire process. But we're just going through our checklist. We're going through everything that we need to determine to make sure this is going to close on time, at the price point we want, and that we're going to be able to execute. So we're doing a lot of secret shopping and the competition, making sure the rent projections that we're estimating are accurate and that competitive. So we're going through all that piece. And then it's getting down to funding. So it'll be webinars and going through all that piece.
Love it, man. That's a great explanation of it. I think a lot of times the game is just managing expectations, and so whether that starts before or after the deal closes, or even during due diligence and during the process of fundraising, right? Like I think there's a lot of management of expectations, and I think you touched on the fact that like that's why it's critical. It's because people do want to have an idea of what's going on. They don't necessarily want to be on the day to day. Hey, I want to make this decision and that decision. That's why they invest in a syndication versus like buying a real property asset that they then have to manage and go through that rigmarole. And so I think that's a really good point. I did want to circle back because you have a unique perspective. There's not many people who hit hyperdrive the way you did when you essentially went from the duplex to like units, when you went from duplex to syndication. So that's a mindset thing. I tell people all the time, this show it's a real estate show. It's an investing show. It's about financial freedom. But at the end of the day, this is all mindset driven. It's getting people from, learning to action, right? Or essentially apathy to action. And so explain just a bit, what was the underlying mindset, sort of your belief system when you were going from duplex to syndications that got you to be able to accomplish that? Because that's a massive feat. That's a very uncomfortable accomplishment, right? Like you have to push through some boundaries. You have to learn things you didn't know about. And not only that, then express those things to other people and have them trust you, right? So what was the mindset you had, as far as like approaching this sort of end goal, right? Creating this company.
That's such a good question, man, because it's always been challenging and it's always been tough and always been hurdles to overcome. I think we use the terminology like start with why and understand your purpose. Like a lot of those phrases that we hear a lot. I think the reason we say that is because for me, the first asset I ever presented to anybody, I was an engineer. I've never asked anyone for money. I've never experienced sales or that route. And all of a sudden I'm in this route where I'm not only selling, but I'm also asking people to invest some hard-earned money. The mentality for me was, I really believed if I had all the money in the world, this is what I would be doing. This is where I'd be putting my capital. So it wasn't like selling people on, I think you should do this. It was, this is what I do. Do you want to do it with me? And then to me, even though there's still rejection and there's all that going on, it's, this is what I want to do. I just want you to be partnered with me on. Mm-hmm. And then it became less of, yeah, man, I'm interested, or it became less of the money aspect and more of, I want to build this relationship with you long term. And I want to keep doing this because I see the benefits and I see that you're going to be here for a long, long time. And that is how I approached it. It's like, this is really what I enjoy doing.
Man, I love it. That's a fantastic answer to that question, because I know when I first got to the point where I was raising money, at that point, my hesitation was always on like the idea that like, I don't want to sell. And as I got into it, I realized I don't have to. I never do. Like I never go to somebody and say like, hey, I need your money for X. Like that's never what it is. It's more of like, hey, I'm doing this. It'd be cool if you want to do it with me. If not, there's zero pressure, right? Like it is more of like, this is something that I'm psyched about and I'd love for you to be psyched about it too. And if you are and you want to dive into it, I'd be more than happy to have you. I think that is the approach that is used often in practice, but people think that it's the opposite, right? They think it's like, you have to go and sell these different assets and then sell these returns and, beg people for money. Like that's not it. And if that is what's happening, like that's not how it should be. I think that's an ineffective way of going about this. So that's a fantastic answer on your part, man. I think it's so important for people to know, like, this isn't about like, I want your money. This is about, I want to do this with you. Like it's a service mentality. I want to introduce you to this asset that can change both of our stars from a wealth perspective.
And I've just been involved with so many people that have done it. And they haven't been, I'll give you the example. I've met so many people that have only been doing this for, I'll say 4 to 5 years. And one example, I won't name them, but they started their syndication firm 5 years ago, and they're over $1 billion in assets under management in their team. So I mean, they're kind of a unicorn in that regard, but at the same time, it's so possible. Mm-hmm. So why would we limit ourselves in our own mindset to say that it's not possible for us? Because it is. The opportunities are out there. The people are out there doing it. I know so many people who are just right now underwriting all day long. looking for opportunities, and they're working on it so that you can be part of it. It's like, you just got to get connected to the right people.
That's
and I
right.
think what you're offering in your platform is the exact way to get involved, for sure.
That's why I have people like you on the show, man. Right? I think there's a perspective out there that a lot of times, unless you hop on here, right, or like hop on another pod, like nobody would ever understand or truly, know that they can be involved in this. They can invest in a property in South Carolina when they live in Michigan, right? Like that's stuff that they aren't necessarily just introduced to or aware of, and so that's why it's critical. But then on top of that, like it's about the fact that we want to do this. The passion is there to do this, and we want you to be involved, right? Like that's the approach, and that's the mindset. It's a fantastic mindset. It's a service mindset. It's an abundance mindset, and I love it because that's how I sort of approach everything every day. Is like service, abundance, and from there we can all win, right? There's no zero-sum game here. So I love it, man. I can't thank you enough for jumping on the show with me. I want to make sure people can find you. So I want to give you a second. Feel free to plug, any social media, your website, anything about Provision. I'd love to have you plug that so we can make sure people can find you. Yeah,
absolutely. The best place, I'm quite active on LinkedIn. So just Jonathan Tonks on LinkedIn. My company's called Provision Space. So provisionspace.com. And we'll have all active deals, past deals. You can check out our portfolio and see what we got going on there. Some education, and I'm sure I'll post this podcast on there as well, so you can re-listen to it. Those are the two best places, the website and on LinkedIn.
Love it. And please do post it, and I'll do the same. No, man, thanks so much for jumping on. I really do appreciate it. To the audience, thank you for joining us. As always, I really, really do appreciate it. Make sure you go to my LinkedIn at Big Law Capitalist. Make sure you go over to make sure you go to my LinkedIn at Jeremy Toms and my Instagram at Big Law Capitalist. I'm just throwing those out all the time. Just mixing them up. But I want to say thank you to you all, and I'll make sure I see you next time. Thanks, everybody. All right. Peace. All right, we did it. Thank you so much for joining me for this week's episode. I really, really do appreciate it. Do me a big favor. If you want to be a part of the Big Law Capitalist community to stay up to date with all of our latest episodes, you got to hit that subscribe button. Super important. But I can't thank you enough for joining me this week. I'll see you next time. Peace.